All right. All right. So again, I want to explain what forex trading is. I will just tell you the definition you get. I'll write down a little definition you get. This definition doesn't actually make sense, but if you read it properly, it will make sense. But I'll explain again what it really is. So foreign exchange. This forex trading involves these. You can jot down if you have your notes. This forex trading involves buying and selling buying and selling currencies. This rain again. With the goal of making profit from goal of making profit from hold on. Goal of making profit
From
from
what?
exchange rate fluctuation. You get exchange rate, hold on, sorry, exchange rate fluctuation. Yeah, so this is exactly what forex trading means. So let me explain this thing in a layman's language. This forex trading involves different countries buying and exchanging from themselves in terms of making profit. Just like example, US and Nigeria. Nigeria is exporting crude oil to the US. US is refining it for us, then sending it back for us at a higher rate. US are making more money in refining, while Nigerians are not making enough money in this thing, in the process. So in this process right now, it is called forex trading. The process of buying and selling, anything that involves buying and selling. Even if you now as a student, you go to the market, mama help me, abeg, I want to buy this biscuit. You are exchanging, you are trading your money for that biscuit. You get. So you are in what's it called, so you are indirectly exchanging value, which is trading. You get. So you guys understand what it is right now. It involves buying and selling of anything. But why we say it's forex trading, because it involves different countries. You get. So you understand the meaning of the trading now, right? Can you guys hear me? Do you understand the meaning?
Yes, we can hear you.
Do you understand the meaning of trading now, right?
Yes.
If you don't understand, let me know. Let me explain it again. Let me use another instance and explain again. Okay, so this market now is a large financial market in the world with a daily trading volume of 6 trillion. You get. It operates 24 hours a day and 5 days in a week. So it doesn't work on the weekend like Saturday, Sunday. It doesn't operate on Saturdays and Sunday. So it's always active 24 hours unless Saturday, Sunday. Market doesn't open on Saturday and Sunday. You get. So you need to understand that this is what you are about to face. So the basic concept of forex market, the basic concept of forex trading. Let me introduce you to the basic concept. Hold on. Sorry. basic concepts in not in forex trading. The basic concepts. Get. Hold on. Hold on, please. Hold on. Let's just move it a little bit down so you guys will understand what you guys are seeing. So the basic concept in forex trading. First of all, the number one basic concept in forex trading, what you need to know in forex trading is what we call currency pair. What we call currency pair. You can write it down, currency pair. These are the basic concepts, what you need to know in forex trading. What is currency pair? You get. What is currency pair? I don't know if anyone here knows the meaning of currency pair. Do anyone know the meaning of this currency pair? Can you guys hear me?
No, no.
Okay.
Yes, we can hear you.
All right. Let me explain what a currency pair is. First of all, a currency pair in forex trading, currencies are traded in pairs. You get. What they mean by currency pair is, let's say Nigeria and US, for example, is trading. So we call this trade that Nigeria and US are trading pair, currency pair, because they are buying and selling from each other. That is why it is called currency pair. Once a country buys from another country, that transaction they made is called a currency pair. That transaction, you call those transaction. Can you guys see my mouse? Somebody should say something. I can't hear you guys.
Yes.
Okay, you guys can unmute your mic, but if your environment is noisy, you can mute yourself. You get. If your environment is noisy, you can mute yourself so that the class will be interactive. You get. You can unmute yourself if your but
Yes,
if only your
I can hear you.
environment is noisy, you can mute yourself. So just like this thing now, just like what you are seeing here, GBP USD, Euro USD, USD JPY, GBP JPY, AUD. You see this? These are currency pairs. As it's paired like this, GBP USD, it is a pair. That is British pounds US dollar. That means the British pounds, US and British, are making transaction here. They are buying and selling from each other. You get. That is exactly
yes, I'm seeing it.
that is exactly what it means. That is exactly what currency pair means. Wait, hold on. So, for example, Euro USD. Then inside this Euro USD, we have the base currency and the quote currency. Inside this, we have the base and the quote currency. So let me use this arrow to identify which is the base and which is the quote. You get. Let me use this arrow to make that. So inside the two, sorry, inside these two, the first currency, which is this, you get, the first currency, which is this, is the base currency, you get. While this second one, sorry about that, hold on. While this second one is the quote, you get.
We're not seeing your screen. We're not seeing your screen.
You can't see my screen. Probably, maybe it's your network. Oh. Can others see my screen? Can you guys see my screen? Ah, this network is really bad. It's really.
I can see your screen, sir.
Can you see my screen now?
Yes.
It's not showing now.
Okay, showing now, right?
Yes. Yes, it's showing now.
All right. Let's get back
Yes.
to the class. So, the first currency you are seeing here, which is euro, is the base currency. Let me mark it out again. This is the base. Let's use
Your screen is not showing.
again.
Your screen is not showing. Your screen.
Hold on. Is it showing now?
No.
It's showing now. It might be on it.
It might be your network.
Okay.
All right. So let's call the first currency BC. That is the base currency. We'll use the abbreviation BC. Then while the second one is the quote currency, we'll call it QC. You just need to know these things, you get. You just need to know them. That's all. You just need to know them. Let's call it QC. You get. It's not really important, but you know, as a newbie in trading, you can't leave anything. You can't leave any stone on. You get. How do they put it again? Unturned. You get. So we have to. Oh shit! We have to touch each and every one of them. We have to touch them. QC. You get. Meaning, let's now know the meaning of this base and quote currency. I hope you guys can hear me.
Can I ask a question?
Yeah, sure. Sure, you can ask a question. You can ask a question.
Why do we have more of USD pairing with other currencies?
Why do we have USD more of pen? Because normally USD is a strong currency. In any day-to-day transaction, we make use of USD. You get. USD dominates the market. That is why we have more of USD currency. Because every day today,
More like it's accepted everywhere.
it is accepted everywhere. That's the fact. That is why it is the strongest. You get. Not like it's the highest too. It's not the highest currency, but it is strong based on you can transact with it in any country you go to. Any country you go to, you can change your USD. If you have $100 now, if you go to let's use the rural area in Brazil, you can change that USDT or USD to their currency, to their Brazilian currency. China Brazilian dollar be waiting. you can change it. You get. But if you use naira to go there, you can't change it because probably those exchangers might not even know the value of naira. You get. But they all know the value of USD. So it is a strong currency. It dominates the market. You get. Not it is not the highest. The highest is Kuwait. The highest currency is Kuwait. But USD is the strongest based on the transaction, day-to-day transaction we do with it. That is why you can see it anywhere. So that is what I have for you. Okay. Let me just explain what this base and quote means. Let me explain what it means very fast so we can proceed. Hold on. I hope you guys.
So
Alright.
you can delete.
Can you see my screen or my connection is lost a little? Sorry about that. My network coverage is pretty bad. It's pretty bad, but we have to continue regardless.
Yep.
So this base and quotes. This means like let's use base for example. The base is the first currency. Okay, let's see now Euro USD. If hold on, let's say 1.200. Let's just use this one as example. That means $1.02. Do you understand? If you see just like this thing now, okay, let me extend my screen. Where is that Euro USD? I don't know if you guys are following. If you are not following, let me know. You get. Can you guys hear me? Oh my god. Can you guys hear me? Sorry about
You
that.
can hear you now.
Sorry about that. It's my network. Sorry about that. So Euro USD, you get. If Euro USD, Euro USD
Yeah,
is
but
equals to 1.0. Has it caught again? If Euro USD is equals to 1. You get 1.2. You get 1.2 thousand, or just say 1.200. That means 1 euro is equal to $1.02. Do you guys understand what I mean by this explanation?
Can you repeat, please?
I said,
Yes.
okay, watch your screen. Watch what is on the screen. You get. Watch
Yes,
what
I'm
is on
watching
the
it.
screen.
Mm.
If the base currency is with the quote currency is equal to 1.200,
Yes.
that means the base currency, one of the base currency, one of euro, like let's say 1 euro, 1 euro is equals to 1.0, sorry, $1.20. You get. This explanation is not really important, but you just need to know. It is a general knowledge that you need to know.
Yes.
It's a general knowledge that you need to know. You
the
get.
amount of the quote currency.
The quote currency is now like one of the base currency is equals to like is equal
1
to
point.
$1.20. 1.20 of the other one. You get. 1.20. The same thing happens to GBP USD. The same thing happens to USD JPY. You get. The same thing happens to GBP JPY. You see, it's all repeating itself because of the transaction going on between them. You get. It all happens because of the transaction going on between them due to the quote and the major and the minor. Let's say the major is the base and the minor is the quote. You get. Let's just use that one as an example. So now, I don't know if you guys understand what I'm saying right now. Can you guys understand it? Have you guys understood what I said? If you don't
I
understand,
get.
if you don't understand, let me know. I'll explain again. If you don't understand, let me know. I'll explain again. It's a simple terminology you get. You don't need to stress yourself about it. You just need to know it. Don't crack your brain. Don't crack too much brain about it. You get. You just need to know. Then there is what we call bid and ask. You get. Bid and
Yes.
ask. There is what we call pips. Then what we call leverage and the rest of them. You get. I'll explain what bid and ask is. I'll explain what pips is, and I'll explain what leverage is. Yeah, these are the ones that are important that you should know. At least you should know what, how much you are bidding and how much the like the ask price, the bid price, and the rest of them. Then what pips is. You get pip, the percent. You get what it means. Then leverage. You need to know that one because you would meet that one in your broker. You get. You need to know it. So let me write it down. Uh, these are the basic concepts. Remember, it is under basic concepts, right? I hope you guys remember. It's
Yes.
under basic concepts.
Yes.
Mhm.
Let me just write all of them out. Bid and ask. Sorry. Bid and ask price. Then pips. Then we have leverage. Leverage. Yes, that is it. Let me just give them mark here. Alright. Let me explain what this bid and ask means. You get. You get. You just need to understand the meaning. That's all. You just need to understand the
Okay.
meaning. You get. Bid and ask. You get. Let's say, okay, let me explain it in a way that you understand. The bid price, it's what the buyer is willing to pay. Bid, bid price is what the buyer is willing to pay. Then the ask price is what the seller wants. You get. Just like now, you go to ShopRite or something. Uh, then you see a cream. You see a cream and you ask for the price. You get. You ask for the price and they tell you that this particular cream you are pricing is 5,000 naira. You get. It's 5,000 naira. You get. And you say,
Yes.
you don't have up to this 5,000 naira. You have 4,000 naira to pay. This is you now. This is you now making it in place of bid price. This is what the buyer is willing to pay. You understand the meaning now, right?
Yes. Yes.
Bid
Yes.
price is like what you are willing to pay for a product. You get. Then the ask price is what the seller wants. The person that is selling this thing wants to sell it at 5,000 naira. But you now coming have only 4,000 naira for the transaction. That is exactly what bid and ask is. You get. Let me just write down the explanation so you guys will not forget. You guys will not forget it. You get. But you have understood the meaning, right?
Yes. Yes. Yes.
Yeah,
Very simple.
I get
Very
her.
simple something. Concept. So the difference between these two is called spread. The difference between the two. The difference between. Let me just write it down here. I'll explain now. I'll explain now. Difference. Write all these things down. You might need. Sorry. You might need the explanation soon. You get. Because in a broker, there is always a spread. Every broker has a spread. And this spread is what they eat from. You get. What they eat from. You get. So the spread is now like the space. Like, not the space. Hold on.
I hear you.
Oh, hold on. I know. I just left this thing. If I waste too much time on the MT5s, all the network will move to it. So now, the spread, the meaning of spread. You see, in between the bid and ask, in between the bid and ask, you get. Let's say
Yes.
bid and ask. Okay, I don't know if I explained this thing before. I think I explained it in a video before about how spread works. I don't know if it's in this video or the other one. You get spread. Spread is like, let me explain this. You see a broker operates in a good way. Let's say now you are a kid. I think it was in the other video that I did it. I explained it. Let's say now you want to buy a biscuit, and you now noticing that you want to buy this thing. The shop you want to buy it from is far from you. You get. Then you find an alternative. Let's say now you see your guy where they go that side, make him buy them for you. You get. You want him to buy the biscuits for you, then bring the change back for you. You get. Then as you are giving this your guy the money to buy the biscuit from you, that your guy automatically becomes the broker between you and that shop and that person you want to buy it from. So now, spread spread is the space in between. Hi, how do I explain this thing? Spread is just like like the bonus money. Bonus money, you get. Bonus money that comes in this transaction, you get, for this person to earn from. You get. From this person to earn from.
Yes.
Like, it's just like the profit. Shit. It's just like the profit generated by this person. You get. It's just like the profit generated by this person. You get. So when you want to transact, let's say when you want to open a trade, you get, you automatically at least lose equals to the spread. Like, okay, how, let me explain it in a way you guys will understand. As you are giving this your guy this money to buy this thing for you, you get, as you are giving him the money to buy this thing for you, forgetting the fact that the guy might reach there, the price of the stuff might have reduced or increased. Then this guy in question might just buy it at that place, might just buy the biscuits with that same price you gave it, then take the remaining money out of it. That is what spread is. It is the profit that this person will make. You understand now? You understand what spread is now, right?
Okay, yes.
The profit this boy will make, if, let's say, when he reaches the shop, you get, and the price of that biscuit has reduced. Let's say the biscuit was supposed to be 100 naira, but it has reduced to 90 naira. You get. Then he comes back to give you the biscuit at that 100 naira rate, taking 10 naira, which you will not know, but the broker make it obvious that they are taking this particular thing. This thing now, this profit this your guy took, this 10 naira he took is the spread. It's called spread in broker. You get.
Okay.
So you understand it now, right?
Yes, I understand.
Let's go to the pips. What pips is? What a pips is? Fuck. My voice.
Sorry.
What happens? So a pip is like the smallest price move in a currency. You get. It's just like a particular price here. The move that this price will make from here to here is called a pip. It is the smallest move in a currency pair. Like any small move, it is it. Any move it makes, any move this market makes, from here to here, it's pips. From here down to here, it's pips. From here up to here, it's pips. You get. No much thing about it. I will teach you guys how to, when we'll talk about risk management, how to use pips properly. You get. Or you can also see it here. You see this line? Sorry. You see this line? Hold on. You see this line here, right?
Yes.
This 2336.00. These are all pips movements. The difference between here and here is called pips. You get no much explanation, but I'll teach you how to use it. I'll teach you guys how to use it in risk management, which is not now. You get. Let me just write the explanation. Pips is the smallest price move. Sorry, price move and can you see it now?
Yes, we can see it.
All right. That is what a pips is. That is what a pip is. Then leverage. Leverage. Let me explain what a leverage is. You get. This leverage now allows you to control a large position with a small amount of capital. Like this leverage, I don't know how to explain it in a layman's language, but you just have to understand it this way. Like it allows you to control a large position. You get. Let's say you have a $10 account and you put your leverage to 1.1 to 1000. 1 to 1000. In that 1 to 1000 you placed it. You get. That 1 to 1000 you place it. You can add multiple position. Like you can place trade 1, 2, 3, 4, 5. You can place like 10 or 15 trades at a time. You get. That is what it means by it allows you to control a large positions with small capital. That is exactly what it means. You get nothing to bother about in it, but you get to experience it when you start trading. When you start, let's say, when you open a demo account, you get. I will show you how leverage works. How it's this is just a theory class. When the practical comes, you will see how to use all these things I mentioned. But you need to understand the meaning. You get. You need to understand the meaning before you can use it. You get. So
Yes.
let me write the meaning so you guys can screenshot. You get. It allows you this leverage. It allows allows you to control a large position. Oh, sorry about that. A large position with a small capital. That is just it. You get. Remember, these are all explanation on the basic. Sorry, sorry about that. Sorry about that. These are all explanation on the basic concept. What you need to know. You get. What you need to know. You get. Remember, we talked about currency pair. I hope you can hear me. I hope you can you guys hear me? Can you guys
Yes,
hear
we
me?
can hear you now.
Remember we talked
can hear you
about
now.
okay, alright. Remember in these basic concepts, our class is about to end in 15 minutes time. When we talked about the basic concept, we talked about currency pair. Then we talked about bid and ask. Then we also talked about pips and leverage. You get. I hope you guys understood what this bid and ask price is. Eh?
Yes, yes, yes.
Alright. The pips, the pips and the leverage.
Yes, we understand.
All right. So now I'll explain the key players in the market. Please screenshot this thing. Screenshot it so I can delete and tell you guys the key players. That will be the end of the today's class. You get the key players in the market. You need to know the key players in the market. You get if you watch now, you can see that we are almost covering number one in the chapter in the timetable. It's almost over. Once I explain the key players, then choosing the broker and the rest of them, I already explained it. If you go to our video, you will see them. You will see them. If you go to our video, you will see them. You get, I already posted the
Okay.
video about it. So let me explain the key players. And have you guys screenshotted? Because I want to delete.
Yes, yes.
All right. Okay, let me leave this. Sorry about that. So let me write this down. Key players. Can you guys see my screen? Can you guys see my screen now?
Yes, we are seeing your screen.
So here now, the key players in the market, in the forex market. First of all, you need to understand what we mean by key players. What I mean by key players is these are the people that contribute to the movement of the market. You can see this market now. You get this gold US dollar, right? You can see it, right?
Yes.
People that contribute and push this market either for a sell or for a buy. Okay, they are called key players in the market, in forex market. First one, okay, let me write all of them down. First of all, you have the retail traders. We have the financial institutions, banks and financial institutions. Then we have the government and central banks. Then we have the hedge funds. Okay, these are the these are the four essential key players in the forex market. I'll write them down. I'll write them down, and also please just hold on a little. I'll write them. Let me write them down. Key players in the market. I'll be fast. Retail traders. Then we have the banks and banks and financial institution. Oh, sorry. Then we have the governments and central. I hope you guys can see my screen. Then we have the hedge funds.
Yes, you can see your screen.
Okay, hedge funds. Let me just add investment firms because these investment firms are also important. Investment firms are also important. You get these
What one? Central what?
Central banks. You get central banks, government and central bank. These are the people that push the market properly. they push the market.
Not see it.
Okay.
You can't see the rest.
Sorry about that.
Okay.
Mm. These are the people that push the market properly. You get. Let me first of all explain what a retail trader is. Retail traders. You get. Retail traders are individuals who trade with brokers. You get. These retail
Yes.
traders are us. We are the retail traders. You get. We, every one of us, we are the retail traders. You get. So that one is what you have to know. You get nothing much about it. Retail traders, we are the retail traders. Then banks and financial institutions. I hope you guys can hear me.
We can hear you.
Banks and financial institutions. You get. Let me explain what it means. Like these people makes up a large portion. You get banks and financial institutions. They make up a large portion in forex volume. You get when what I mean by they make up a large portion in forex volume, they move the market. Reasons why market moves is are majorly on banks and financial institutions. You get they are one of the key factors why the market forex market moves. You get nothing to explain about it, just this is just the meaning. You get then we have the government and central banks. You get central banks. You get when this particular place now that they wrote central bank, it can be the Federal Reserve. You know what the Federal Reserve is? You get can you guys do you guys know what the Federal Reserve is?
Mm,
Okay, after this class search for what Federal Reserve is. You get these are the people that influence currency. Hold on, please my system just can you guys see my screen now?
your screen. You're seeing your screen.
All right. These Federal Reserves, like central banks, it can be called like Federal Reserves. Like they influence currency price. You get through monetary policies. Like these people, like they can push the market a little. They can influence, like they can influence the currencies, the price of the currencies through monetary policies. These are like let's say news. You see this NFP news, CPI, and the rest of them.
Yes.
You guys have heard about CPI, all this news, bah? News where once you see
Yes,
them,
yes.
something like this. You see this thing? You see this candle? You see this
Yes.
you see this bearish candle?
Yes.
It is caused by a news. I think this is just one random news. It's tomorrow that we're having CPI. We'll be having a serious news tomorrow by 2:30 CPI. You get. So
Yes.
the government and central banks, they are the ones that take this news, like they influence the price through news like monetary policies. That's what it means. Then hedge funds and investment firms. You get these people are just like they move the currencies too. You get just like the banks and financial institutions. The hedge funds and investment firm do the same thing. You get
Yes.
yes. That is just what we all need to know in this particular phase. You get if you watch our this thing now, I have explained the full one, the number one course outline. I have explained it. So by next class, we'll be starting with fundamental and technical analysis. Trust me, this is all you need to know. Because I could have explained more. But it will be very very it will be very very useless information. These ones I explained to you is what you need to know. Before I open this class, I told you guys I will go straight to the point, right?
Yes. Yes.
Yes, I am going straight to the point. These things I explained this night are what you need to know. What you need to know. You get what you need to know. Other informations are useless. That's the honest truth. You get. These ones is what you need to know. So write them down as you screenshotted it. Go through them. Search for. Make sure you look for what. Make sure you look for what Federal Reserve is. You get this Federal Reserve.
Yes.
Let me just write it for you guys. Federal Reserve in a bracket. Federal Reserve. Federal. Search for what it means. You get. There is also a website